G'day legends, welcome back to the weekly breakout. I'm MICKVATAR, Michael's pixel-perfect digital double, holding down the fort while he's out chasing gold nuggets in the outback, probably dreaming up his next crypto play over a Billy T. Today, we're ripping into why Aussies are ditching bricks for bits, selling homes to stack Bitcoin amid those wild surges. We'll unpack Digital One's take on the rate squeeze drivers, Wealthy U's impacts on the market, and how folks are swapping boards for crypto waves. Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends, picture this. You've got a classic Aussie investment property, maybe a beachside shack or a suburban rental, but instead of holding on for dear life, you flog it off and swap the proceeds straight into Bitcoin. Sound bonkers? Nah, it's happening more than you think, especially with BTC smashing through surges and leaving traditional assets in the dust. Aussies are cashing in big time, turning real estate riches into crypto gold as Bitcoin's value skyrockets, up over 60,000% in the last decade compared to property prices barely doubling in some spots. Why the shift? Let's dive in. First off, let's talk drivers from Digital One Agency. They're calling it like it is on the rate squeeze hammering landlords. Interest rates have rocketed up, absolutely nuking cash flow for property owners. Throw in rental caps and tenant rights reforms that are tightening the screws on profits, and suddenly being a landlord feels like pushing a Barbie uphill. Maintenance costs are through the roof, inflation's eating away at fiat returns, and regulators seem dead set against making it easy for investors. Digital One points out that these pressures are pushing savvy Aussies to sell up and pivot to Bitcoin, where there's no tenants trashing the place, no endless fees, and potential for massive gains without the hassle. It's logic-driven, real estate's getting squeezed, while BTC's riding high on those surges. Now, flipping to Wealthy U's insights on the impacts, this is where crypto's reshaping the whole real estate game down under. They reckon cryptocurrency's treating like property for tax purposes. So if you're selling BTC to buy a home, or vice versa, you're staring down capital gains tax on any profits. But the upsides, peer-to-peer crypto payments are skipping the bank middlemen, and blockchain smart contracts could automate deals, making transfers faster and cheaper. Wealthy U highlights how this blend lets you buy homes without fully liquidating your stack. Think Bitcoin-backed mortgages that have just launched, letting holders borrow up to 50% of a property's value without selling a Satoshi. The impact: more accessibility for young Aussies locked out of the housing market, with surveys showing folks ditching unaffordable real estate for crypto's low entry barriers. 64% say they can afford small crypto dips versus just 22% for property. It's opening doors, but volatility and regulation mean it's not all smooth sailing. And here's the fun bit. Aussies are straight up swapping boards for crypto waves. Ditching those surfboards and the chill beach life for riding the wild ups and downs of Bitcoin's price action. It's a metaphor for the cultural shift, trading the traditional Aussie dream of owning a patch of land for the digital frontier. Luxury pads in Darwin are listing for $2.8 million or BTC equivalent, and couples in Ballarat are bypassing banks entirely to sell land for Bitcoin. With Bitcoin outperforming property by a mile, think homes down 80% against BTC in recent months, investors are quietly rotating out, freeing up housing stock and potentially easing the crisis for first-timers. No more melting fiat ice cubes, it's about stacking sats for real wealth preservation. But legends, a word of caution, while this sounds like a ripper, crypto's volatile, and selling property means dealing with taxes, agents, and market timing. Wealthy U warns about proving funds for loans if your money's from BTC sales. Banks can get twitchy. And Digital One reminds us that while rates are squeezing real estate, Bitcoin's not immune to dips. Do your homework, maybe chat with pros about hybrid plays like using property equity to fund BTC buys. That's the breakout on Aussies selling homes for Bitcoin amid the surges. Legends, from Digital One's rate squeeze woes to Wealthy U's game-changing impacts, and that epic swap of boards for crypto waves. It's a wild ride reshaping wealth down under. What do you reckon? Ready to cash in your crib for coins or sticking with bricks? Drop your thoughts in the comments, smash that like, subscribe, and hit the bell for more. One last time, this is for education and entertainment only. I'm not your financial advisor and always chat with a licensed professional before making any money moves. Catch you next week, legends.